Hey everybody, Steve Ankerstar here. Thank you so much for listening in. Yes, I'm feeling better. Yes, I kind of almost have my voice back, and I should be able to get through this whole presentation without coughing, but this should be a quick one today as well. I just went, it's right after the market close on Friday, but a couple things happened today that are super important I wanted to address. First of all, we're going to talk about the January jobs number we got out this morning. Complete surprise, completely healthy number for the economy. That's fantastic. So we'll talk about why the market sells off on good news. Well, there's the first cough. Sorry about that. Next, we'll talk about Apple stock. Apple had terrible earnings last night. Kind of the big three. You got your Apple, Amazon, and Google. All missed earnings last night. So today was set up to be a horrible day, right, for all three. Apple survived it and actually ended up in the green. So we'll talk about why that is. And then lastly, we'll talk about investing in artificial intelligence. Chat GPT's kind of capturing the news lately. So a lot of AI stuff. We do have an investment out there. ROBT is the ticker symbol. It's the AI robotics index fund that a lot of you are in. It's in most of our models. So we'll just talk a little bit about there's that option as well as some other options for investing in artificial intelligence because you like me think that's probably going to be the future, right? Until robots can fix robots, and then Elon Musk says it's all over for humans anyway. So we shall see how it plays out. Before we get started today, remember it's a financial education presentation. You have to do your own due diligence before acting upon anything you hear in this presentation. Full disclosure information is available at ankerstarwealth.com. Now let's get started. Let's talk about those. Let's see the jobs number this morning. Yeah, expected 175,000 jobs to be created, and we got 517. Again, this is off of CNBC. More that's higher. 187 was the estimate. So unemployment rate falls to 3.4%, the lowest since 1969. May of 1969. That's before I was born, and I'm not that young. Not that young, not that old, but not that young. But yeah, that's before I was born. So we have amazingly low unemployment. How can that happen when there's layoffs everywhere? Well, who's getting laid off and why are they getting laid off? Well, it's largely tech firms are laying people off. And again, largely it's because it's leadership has an excuse because of this mother of all recessions that's coming. It's not coming. This proves it. It's a data point. It doesn't prove it. I got that. That was a little too hardcore, but it's one of the indicators that the mother of all recessions is not coming, right? So they're getting laid off because companies are taking the opportunity to kind of thin out their workforce, right size, blah, blah, blah. Some companies like ServiceNow or Apple are not laying anybody off. Their stocks have been rewarded for that, by the way. But yeah, and who needs people to work? Well, it seems like restaurants, right? You had the massive COVID layoffs. Restaurants are still not operating at capacity. Not that you can get laid off from your, $220,000 tech job and go to work for Red Lobster, but it does cascade down. And the people that are getting laid off are highly skilled people that can probably, I don't know, every situation is different, but probably are employable somewhere else fairly quickly with a company, maybe small companies that are growing, right? So, the layoffs aren't as scary as when Walmart's laying off. Oh my word, right? I mean, that's an oh crap moment for the economy, not necessarily for tech layoffs. So why would the market today celebrate, sold off hard because we got this good jobs number and then came all the way back and then sold off hard through the rest of the day. So this is, if you've ever heard people talk about good news is bad news, there's people out there who think, and I'm not one of them, that the Federal Reserve may now have more ammunition or may feel more comfortable with raising rates some more. Remember, the Federal Reserve has two jobs, two mandates from their charter. It's to keep employment under control and stabilize interest rates, which is kind of stabilize inflation too. So it's not a one for one that, this is what the Fed is doing is working. It's working slowly over time, and they may or may not, make this soft landing we hope for, where we don't have the mother of all recessions. We'll see. But no, I don't think Chairman Powell and his team of experts are going to automatically raise rates just because unemployment's low. I don't think that. Obviously, the market thought that today. Plus, there's a little bit of profit taking after some couple of amazing days moving up. So when you look at technology, which is largely the NASDAQ, it's up. Well, we'll take a look at it actually, since I have it right in front of me. Just pull up the Qs real quick. Q. And maybe not as quick as I hoped, but yeah, look at this move this year. I don't know what I did there. But we'll go back to it. Yeah, look at the move this year. That's the 1 year, year to date change of 15%. So on the 1 year change, that's minus 13. So I mean, come on, man, 15%. So there's a little bit of profit taking out there today in technology, but technology is coming back. You can see it right here on this portion of the chart. I said it would for a year. I know, thanks to your patience, right? You're like, well, Steve says technology is coming back, and it never does, right? So yes, it does. Here it's coming back, right? It came back here, but that was a little bit of a head fake. But when technology comes back, it snaps back hard. Just remember that. Okay. Speaking of technology, let's talk about Apple and Apple stock. They botched themselves some earnings last night. Yeah, everybody's going to have up and down quarters, and people are like, well, let's just go ahead and move the stock price higher. Well, why is that? I had a question from a good friend and investor today. It's like, Apple, really? You get to fumble on the goal line and you get rewarded? Well, remember, earnings are 3 numbers, right? So there's the top line, that's revenue off the balance sheet, and then off of P&L, and then there's bottom line, that's your earnings off the P&L, and then it's your forecast and guidance, where you go out 1 quarter, 2 quarter, 3 quarter, and however often. There's no real form to that, other than most of them go quarter by quarter and then out a couple years. Well, a lot of that takes some time to digest. So when Apple released earnings last night, boom, it got hit hard, right? Well, that's that high frequency trading we talked about the other day. The computers get that, and they immediately, a miss means sell or trade, right? Which can drive the price down after hours, which it did. And this morning it opened up. It was still red just prior to the open. The next thing I knew, Apple's all of a sudden in the green. And then it did obviously finish up 2.4% off of botched earnings. Yeah, that's because there's more to the story. The stocks are the future potential, not what just happened. You can spend all day, every day investigating what happened in the past, and that's fantastic. But it's where the company's going. I honestly think, and obviously, I'm biased. Full disclosure, number 1 holding personally, number 1 holding in the book. It's going back to new highs, and it's going to go there fairly quickly. It is literally the best company in the world. Has one of the best CEOs, if not the best CEO at the helm. What's not to love? I mean, I have that. My phone's actually not within reach. Well, I'm on a MacBook, so there you go. I'm literally touching Apple pretty much 16 of my 16 waking hours, right? So I don't know. Make your own decision. But where's it priced? 26p, 25p should be, way higher than that. I'm not saying 50. It's not going to necessarily double overnight, but yeah, I mean, come on. Anyway, that's my take there. How's Apple doing on the year so far? Year to date change 18.91% for the top holding in the book, and personally, I'll take that. Thank you. Victory lap. Look, okay, 2022 was a rough year. It was a long time, man. So take a little victory laps on occasion, not too often. All right, I'll close with this. Got a question. I had a call today with another good friend and investor about artificial intelligence. How can I invest? Are we doing it? Are we doing enough? And how can I do more? All right. I'm buying some of the other individual names right now, so that I don't want to necessarily go public on what I'm buying until I've done bought what I'm going to buy. But what we've been in, and we've been in this for a couple of years now, is this ETF. So when you think of an investable theme, like, do I think AI is the future? Yes. Is it going to make a bunch of money? Probably, right? How do I capitalize on that? That's investing like 101. And then the how is some of the art. So that's the science of, hey, what's in the future, right? The art is how. You can go to an ETF, which is what I prefer most of the time. Yes, you have to pay a fee for that. 8 fees, got it. Next, right? They provide a service. So First Trust and their team is compiling a list of companies, like, I don't know, 30 to 50 that are in the artificial intelligence and robotics space, and putting them into a fund for us. If I can't pick best of breed, I'm going to take that all day. Right? I just am. It's not worth the time to get into individual names unless you have the expertise to do so. Well, I've been working on that. I've got somebody on my team working on that to try to decipher some of the best of breed names. A couple of you may have heard of, a couple of you may have not. So there's some austere names in this crowd. But anyhow, really looking at the robotics theme going forward. It started the year at 35. It's up at 42. I won't embarrass myself with math other than this does it for me. 19.48% year-to-date change. And I think this chart shows that it can go a lot higher. So And, you don't do PEs when you mess with all the companies that are out there that included in it. But I think it's really a place to have money and look to increase that exposure over time. So that's all I've got for today. Thank you so much for listening in. I'm dealing with my cough. Hopefully it's completely gone by Monday. If you have any more questions, send them out. That is what drives the content for these little presentations. So you guys have a great weekend. If you're in the middle Texas area, have fun with the cleanup, like what I'm going to start doing here in about an hour to go out and clean up the yard. So have fun. We will talk to you guys on a Monday morning. Have a good one. Bye.